Okay, great. All right, welcome to another FX Street webinar. My name is Fan Yang. I'm the Chief Currency Analyst at ForexMinute.com. I'm excited to be here today as we begin another week in the Forex markets. I'll be talking about the fundamental backdrop to some of the majors and the technical setups as well, and what we can expect in this week and the upcoming weeks. Now, I'm going to start with the US dollar index and just go over a little bit about today's reaction to the U.S. data today. We had a mixed bag of, positive Empire State manufacturing data. We saw capacity utilization kind of fall a little bit, showing a little more slack in production, and also we saw a decline in industrial production numbers for August. So there was a mixed bag, but the underlying economic trend for manufacturing is still, relatively strong. The U.S. dollar is still supported by strong economic data, even though, it hasn't been that impressive in Q3 in third quarter, based on jobs data as well. Now we had this bearish 1 hour candle here following the US data today. So the US dollar index remains in this week-long consolidation. The market is tentative. It's US dollar strong, but it is tentative ahead of Wednesday's FOMC meeting. So that's this week's main risk event for the US dollar. It's kind of a light week in terms of economic data, but Wednesday will be a big one for the U.S. dollar and for British pound as well. We got the Scottish independence vote on Wednesday. So a lot of things to look out for. Now, just going back to the U.S. dollar, the U.S. dollar index, looking at this 1 hour chart, is in this consolidation, and after today's data, we're not really seeing much of a reaction, at least not much of a follow-through to the initial reaction. If it does fall back below 84, then we might see some US dollar consolidation or correction ahead of Wednesday's FOMC meeting. In the very short term, we might dip back towards this 83.60 level here. Okay, let me just draw a support line there. Now, this satisfies a range breakout projection, which takes the width of the range and projects it into the direction of the breakout, right? Just visually, you can see that 83.60 would be our first target for the bearish outlook. And we should limit that bearish outlook because we know the prevailing trend is bullish. When we look at the 1 hour chart, when we look at the 4 hour chart, when we look at the daily chart, okay, and even when we look at the weekly chart. Now, the weekly chart shows that we're approaching the 2013 highs here at 84.75, and the dollar index, the RSI in the dollar index is in very overbought area. So we might see some consolidation around the 84.75 area, especially if FOMC doesn't give us any hawkish expectation. I don't think Janet Yellen is the type that will give us very clear market direction or guideline to when the FOMC will be raising rates. It's going to be a very subtle. There will be subtleties in the language. For example, she's going to talk about how long the bank has to remain in this near zero interest rate campaign, and if she says a considerable amount of time, we're back to where we've been, and the expectation remains to be mid 2014 for the rate hike. If she removes considerable, if she starts to talk about, focuses on good data and how that might affect the timeline for interest rate, then we might see the US dollar break above 84.75. But nonetheless, we should start to expect some consolidation around this high. Now, after the FOMC, if it's very hawkish, we might actually see a push towards this 88.70 high here from back in 2010. So the U.S. dollar, despite being very strong and looking overbought, still has room to rally. Okay, but we need to see the FOMC give us some hawkish tone. And if Yellen still says we need considerable time, then we should expect more of a consolidation instead of a bullish continuation. Okay, so with that being said, that's the US dollar. Let's go to some dollar crosses. Go back to the 1 hour chart. And we'll start with the euro dollar. So the euro dollar, if you've been following my posts on Forex Minute, we have been seeing a week-long consolidation here, right? This looks like a triangle that was broken last week. Okay, and but after the breakout, the market still remains bearish. It's still holding below this 200-hour move. Simple moving average. There are some signs though, that the market is turning bullish in the near term. Okay, so we had the breakout here. We have the RSI tag 70 and hold above 40. That shows bullish momentum developing here. At the start of this week, we had a breach of 40, but pretty much the RSI pretty much stayed above 40, and the bullish momentum is still there from last week. Okay, now just keep in mind, this is what we're talking about, near-term bullish momentum. So this is just looking at the intra-session time frame. So now we're at the crossroad. Let's get rid of this triangle. We're at the crossroad, and the market looks like it wanted to develop this inverted head and shoulder, but failed to break the neckline. Okay, so now we're still consolidating. So let's not think about this as an inverted head and shoulder or whatever pattern. The essential, the bottom line is euro dollar here is consolidating, trying to find a price bottom, and if it breaks above 1.298788, we have a price bottom, and we can look for some short-term bullish correction. And keep in mind it's short-term because we know the medium-term outlook remains bearish. Okay, so let's take a look at what would happen if we get that bullish correction. Okay, so here we're in the 4-hour chart, and I just want to measure this attempted price bottom here. Okay, again, if we're going to project a breakout, we can use the width of this consolidation and project into the direction of the breakout, and that would mean we might want to limit our bullish outlook to 1.31, 1.3110, especially ahead of the FOMC meeting, because if we get a correction, it's not likely a trend. It's likely a like I said, a correction ahead of key risk event. Okay. For the euro dollar now, there is still further downside. Okay, when we look at the daily chart, we might actually have to look at the weekly chart. Okay, despite this pair looking a little bit oversold, we know that there is still some further downside towards that 2013 low here of around 1.2745 up to 1.28. Okay, but we should probably expect some consolidation as the market approaches this area, some meaningful consolidation that we didn't have since falling from just below 1.40. So the euro dollar still looks weak, still looks bearish, but in the medium term we might be approaching a key support area around the 2013 lows, and with the market being oversold, we can expect some consolidation. Alright, let's move on to the pound dollar. Okay, so the pound dollar is also sharply bearish. Let's go to the daily chart first. Sharply bearish since July, when it hit the high on the year at 1.7191, and it has been just sliding sharply with no meaningful consolidation or correction, and we accelerated even lower here with the uncertainty coming from the Scots independence vote that's looming on Wednesday. So let's put aside the fundamental factors for now. The pound dollar here looks like it might have found a little bit of support at 1.6050. We have a little bit of a pullback, but when we look at the 4-hour chart, we see that the market is consolidating again and holding below last week's high around 1.6276. The market has pretty much closed up this gap that we had from the opening, and so it looks ready for that bearish continuation. All right, when you look at the 4-hour chart, you see the RSI here tag below 30, even below 20, come back up, and it's holding below 60, which shows you maintenance of the bearish momentum in this time frame. You do see the moving averages in bearish alignment, sloping down, expanding or diverging, spreading apart, and price is still trying to hold below all these moving averages, so the bearish bias is still there. Okay, to me, I would look for this market to come back down to test these lows ahead of the FOMC meeting, but I might be wrong. If the market pushes above 1.6277, then we can look at some short-term bullish correction with upside towards 1.64, which is where the 100-hour simple moving average is. Okay, so these are we'll be looking at some very short-term outlooks until Wednesday. After Wednesday, we might have a better idea of where traders want to take pound dollar. For now, we should limit any bullish outlook to 1.64 and any bearish outlook to last week's low around 1.6051. Now, looking at the bigger picture, we know that there is still some downside. Okay, but that downside is coming up against some key support factors. Okay, we know. Now let's take a look at a Fibonacci retracement of the 2013 to 2014 rally. Let me just okay, and what you see is price approaching this 50% retracement level at 1.60. 1.60 itself is a psychologically sticky type of price. We would expect the market to consolidate around this level. We saw that here. We saw that in a lot of action kind of oscillating around 1.60. So as the market approaches 1.60, 50% retracement, and the 200 weekly moving average is also there. So we have a lot of support factors, and adding to the fact that the RSI is almost oversold here. It is oversold in the daily chart, I believe. Not as oversold in the weekly chart, but if it comes down to 1.60, we might see the RSI around 30, which gives us more reason to believe we should be anticipating some consolidation here around 1.60. So bearish outlook remains, but 1.60 is a key level we should start to monitor for support. Okay, so pound dollar, bearish in the short term, key support coming up. Okay, let's see. Okay, we got some. Okay, so Black Cat. I think ahead of Wednesday, we should keep our position size very small, and our outlook very short term. Like I said before, even of 1.64 bullish outlook, it is a bit of a aggressive outlook in the short term. So but we should at least limit it in the short term ahead of the FOMC. Okay, so yes, we can trade, but we should be conservative in terms of position size and the time frame for your trade, for your outlook. Let's see what's going on with the dollar yen consolidating in the 1-hour chart. Okay, we saw the dip here following the US data, but not a lot of follow through. The momentum is still bullish with the RSI here holding above 40. price looks like it wants to come back above the 50-hour simple moving average. So, we can't. If there is a bearish correction, I would limit that to the 106.60 area ahead of the FOMC meeting. We might be able to buy, put a buy order here. Again, small position, but we have to anticipate, strong or wide volatility on Wednesday. So if you're going to put in a position, you want to have a wide enough stop, and if you're going to have a wide enough stop, you don't want to have such a large position and such high risk. Okay, so this is here 106.60, our first support. We obviously see a second support here around 106. Okay, so after the FOMC meeting, if price can stay above 106, I think the US dollar Japanese yen pair is still bullish in the short term and in the medium term. Okay, when we look at the weekly chart, let me just here we go. This is a very bullish market. Okay, this is very bullish in terms of price, in terms of the structure of this rally. It looks impulsive, or not that, with Elliott wave terminology. So this, and also prices now above all these moving averages. The RSI tagged above 80 and stayed above 40. So this is a major trend developing. And if we look at the monthly chart, we see it cross above the 200-month simple moving average. So in the short term, the next key resistance could be around 108.90 to 109, which is the support and the 2006 low. Okay, so that's in the short term. If the dollar yen continues and breaks above this week's or last week's high, we have the 108.90 to 109 area as our first resistance, up to the 110.68 area. This is resistance for the medium term, especially with the monthly RSI here in the overbought area. So still bullish, but again, with a lot of these US dollar crosses, we're seeing major support or resistance levels. In this case, resistance level around 109 to 110. Now, I'm going to draw a declining trend line as well to show that this is also reinforced by this falling trend line going back to 2001, 2002, actually, the beginning of 2002. Okay, so dollar yen, I feel like a broken record now. Dollar continues to be strong, major resistance ahead. Okay. Let's turn our attention. You know what? One more U.S. dollar cross I want to take a look at, actually. How about the Kiwi Dollar? Okay, so the Kiwi Dollar is finding a little bit of support today to start the week. Not much of a bullish outlook yet, but it might threaten this September trend line. We're coming up here, threatening that September trend line. Now, Kiwi, I want to talk a little more about the fundamentals. Now, technicals, it's bearish, and when we look at the week, here we go, daily chart, we can see that there's still downside risk towards the 2014 low here at 0.8051. Okay, we might expect some consolidation around this low, but for now, the market is very bearish, and that can be attributed to several factors. We know the U.S. dollar strength. That's one factor. The Reserve Bank of New Zealand also stopped its rate hike campaign after 4 rate hikes in 2014 that pushed the official cash rate from 2.50 to 3.50%. The bank has decided to pause that, and the next rate hike is expected to be around 2015, after the first quarter of 2015. Okay, so with that in mind, the Kiwi dollar is still bearish. Now, one more thing is commodity prices. The Kiwi dollar is a commodity currency. It's correlated to commodity prices, especially dairy, because New Zealand is a major exporter of dairy products. Now, I just want to bring this site here to your attention, and this is a site that has a dairy price index. So it combines a lot of dairy products and puts it into an index and looks at the prices over time. And we can see that this year, the dairy prices have been declining every month, almost every month, excuse me. Okay, so that is another drawdown on the Kiwi dollar. And if we're going to expect the Kiwi dollar to revive its prevailing bullish trend in 2012, 2013, we want to also see dairy prices at least come back, at least not be declining every month. We want to see a few positive commodity price inflation data before we expect Kiwi strength. Okay, so that's the Kiwi dollar. We could take a quick look at gold as well. You guys can let me know what pairs you want to look at. I have a couple more in mind, but I'm open to looking at whatever currencies you guys want to take a look at. So when we look at gold, we should expect we should expect this market to come down towards the 2014 low. Okay, the market has been pretty much sideways in 2014, but we know the prevailing trend is bearish. And when we look at the weekly chart, okay, we see that the market has been in consolidation a little over a year, but there is still that bearish bias with price below the 200, 150 week simple moving averages, and with the RSI holding below 60 after tagging below 30, which shows maintenance of the bearish momentum. So price looks poised to come down and test these lows here from 2013 and 2014, just above 1180. Okay, so another reason I believe gold will continue lower is because we already saw that in silver. Okay, when we look at the weekly chart, it's very similar to gold, and silver is already making fresh lows on the year. Okay, its next support will be that 2013 low at 18.20. Okay, so it's a similar situation here from a technical standpoint, in terms of price action, in terms of the moving averages, and in terms of the RSI in this weekly chart. So silver looking like it also wants to break below this support here at 18.20. Again, hawkish FOMC statement should help it move lower. If central banks are in stimulus campaigns, are implementing stimulus measures, that means fiat currencies, there's a lot of money supply, right? And that brings up commodity currencies. That brings up commodity prices. On the other hand, if the US dollar is strong, commodity prices should be lower, and that applies across the board: gold, silver, platinum, palladium, copper, oil, and as we saw before, dairy prices. Okay, so this is a large wave of commodity deflation, and we shouldn't we shouldn't go against it at the moment. Okay. All right. So with the commodity prices declining, we saw Kiwi dollar, we saw that the weakness in the Kiwi dollar, and Aussie dollar is also correlated to gold. So and in general commodity prices. So the Aussie dollar looks very bearish since, well, this month actually. It's very sharp decline from 0.94 all the way down below 0.90. So this very sharp decline opened up the bearish outlook. When we look at the daily chart, we saw that it broke below this multi-month consolidation, And the market looks like it's poised to come down at least to test these lows here from February and March, maybe around the 0.89 area. Okay, so that would be the next target for Aussie dollar, especially if the FOMC remains kind of hawkish, even if it doesn't give us an ultra hawkish statement. As long as it's not dovish, I think Aussie dollar still has downside towards 0.89. At that point, we might expect some consolidation if the FOMC didn't sound like very, very hawkish. Okay. Again, this is a little too early to talk about trading off these technicals just yet. I'd rather wait and see the reaction to these levels. Like I wouldn't just, if the market is falling sharply towards 0.89, I wouldn't just open up a buy order here, even though we're oversold, and this is indeed a support area. What I want to see is some kind of consolidation in the near term, and this applies to all the U.S. dollar crosses as they approach those key support and resistance levels I talked about before. If the market's coming at those levels fast, you don't want to go against it. And it's like for the Aussie dollar, if you buy here at 0.89 while the market is rushing down here, it's pretty much trying to catch a falling knife. You want to see some consolidation that sets up, like my ideal case would be the market comes down here, it sets up intercession consolidation, sideways consolidation, and then breaks above that consolidation. Then I would be looking at some short-term bullish outlook back towards 0.91, maybe 0.9150, some common resistance levels here, and the most aggressive bullish outlook from this point would be back to 0.92, which would test this previous consolidation support as resistance. Okay, so that's the Aussie dollar. All right. Let's see, what else do we want to take a look at? I wanted to take a look at the euro yen, move away from the US dollar crosses, and take a look at this currency pair. Okay. Oops, went to the. Okay, let's start with the 4-hour chart. Why not? When we look at the 4-hour chart, we saw the market trade sideways in August. It was very choppy. It looked like it failed a bullish correction, which usually is a sign that that bears are in charge. So when the market broke above 138 here, but failed to extend it and then started to fall sharply, to me that was a bearish continuation signal, at least to retest this low here. And for the most part, the market did come back down to retest this low here around 135.80, but it failed to continue that bearish trend, and an almost equally sharp bullish reaction followed. Okay, so now this reaction broke above these highs from August and the beginning of September, and it's pretty much giving us a bullish signal here. Okay. Now, if this comes back and pulls back, a bullish market should keep this pair above this cluster of simple moving averages, 200, 150 period simple moving averages. If that's the scenario, so if there's a pullback and the price can respect these moving averages as support, that would be called a bullish slingshot signal, and the euro yen would confirm this bullish signal that it gave last week. Okay. Now this bullish signal goes beyond just creating this price bottom. When we look at the daily chart, okay, we can see that price just broke above this falling trend line from April this year. Okay. Furthermore, it's price has broken above the 150-day simple moving average, so it removed some of that bearish bias it had in June and July when price was below these moving averages. Okay, also the RSI is trying to push back above 60, which would show loss of bearish momentum, and in that scenario we can look for a bullish outlook, at least in the short term, towards 140, you see that the 200-day moving average is just below 140. There's this support resistance pivot around 140. That goes back uh, to March, April, and in June. Okay, so one trade idea could be, when you look at the 4-hour chart, one trade idea could be to wait for this pullback. All right, and if it's let's say around 137.40, if you see the market start to stall there, maybe we can put in a buy position around 137.40. Also, you want to see the RSI in this 4-hour chart hold above 40 to confirm that bullish momentum is developing. If it falls back below 40, we don't have bullish momentum. The bullish momentum is not sticking, and Euro Yen might be back in sort of a consolidation mode, where we might want to just stay away from it. Okay, but let's say the RSI holds at above 40, around 40. Price comes down and starts to consolidate around 137.40. Let's say we put in a buy around 137.40 and a stop loss below 137. Let's say 136.80. So that would be about 60 pips risk, maybe a little more if we don't, if we get in a little higher. So with that 60 pip risk, we're looking for, first of all, our first target should just be back around these highs, 139. Okay, and that would be about 150, 160 pips. Okay, so that would be pretty much barely a 2-to-1 reward to risk, but we're talking about a conservative bullish outlook, and that's a reasonable. It's reasonable to be conservative because we know the euro is weak fundamentally right now, even though the Japanese yen is even weaker. Okay, so we're playing weak against weaker here. This is not a runaway trend. This is sort of that's why we also expect some kind of choppy pullback, because these two currencies are both weak. It's not like one currency is. It's not like their central banks have diverging monetary policies. They're pretty much both looking at stimulus measures. All right, so now the more aggressive outlook to 140, you can imagine it's about 250 pips, 260 pips to the 80 pips risk. So that's about 3-to-1. Okay, so that's one trade idea for the Euro Yen after the breakout. Okay, the Euro Aussie. The Euro and the Pound Aussie could be hot. Well, the Aussie also is pressured, so I would expect them to be a little choppier than, let's say, the Euro Dollar. Okay, so let's take a look at the Euro Aussie. Okay, so this definitely is a very strong retracement, right? Let's go back to the daily chart. Okay, we see some kind of V-shape pullback here. And it looks like it can be the beginning of a reversal, okay? But let's not jump ahead of ourselves at the moment. There is still this prevailing bearish trend, and and the Australian dollar. I wouldn't say the Australian dollar is weaker than the Japanese yen. It is weaker in the short term, but in terms of monetary policy as far as monetary policy is concerned, which affects more the medium term, long term outlook, I still feel Aussie is stronger than the Japanese yen. So I feel like, if we're gonna buy the euro, we want to buy it against like the Japanese yen, but maybe not the U.S. dollar, for example, and maybe not the Aussie, but we'll see. Let's see how this breakout ensues. So for now, looking at the daily chart, we have a breakout. We have the RSI still below 60, though. There's a chance that the market will start selling this here around 1.44, and we did see a little bit of reaction today. That's not bullish, and if we get a bearish pullback, we can look at that pullback to see if it will build a bottom. So in the short term, I would still expect a bearish outlook as the RSI turns from 60, as price turns back below, stays below 1.44. Now looking at the 4-hour chart, we're not seeing that yet. Now, if we get consolidation and then a break below 1.43, that would confirm my theory of a pullback. And if we get that pullback, we want to see it hold above 1.4050, and we want to see the 4-hour RSI hold above 40 if we're going to anticipate another bullish attempt. Okay. So again, the Euro Aussie, just like the Euro Yen, is in a bullish breakout, but because the prevailing trend was bearish, we should expect some kind of pullback before jumping on the bullish idea. The pound Aussie. Let me look for that. Just give me a moment here. Oh. There we go. Pound Aussie. It's not a pair that I usually look at, and I'm using the Netdania charts, and I don't see it right now. Maybe. Let's see. I know what to do. Okay, let me just search. Oh, that is not pound Aussie, that's pound yen. Okay. And we could probably talk about pound yen as well, because for some reason I can't find pound Aussie in this Netdania chart. Okay, we'll come back to that if we have time. Let's just take a look at the pound yen at the moment. Sharp V-shape reversal here. Much like the Euro yen, much like a lot of yen crosses. Okay. Now, let's go to the daily chart. Now, this market has been pretty much sideways in 2014, but it maintained a bullish bias in terms of staying above the 200-day moving average. Now, last week, we saw a dip below the 200-day moving average to start the week, but the market came back up roaring. So we don't have that bearish outlook. It looks like the pound yen is still bullish. It looks like it's poised to test the high on the year here at, let's see, 175.34. Okay, and I think this like the Euro yen, this might be a candidate to buy on the dip. Okay, after this very choppy few weeks, but we want to maybe wait until after the referendum on Wednesday. Okay, the pound yen might still be just choppy, and we want to stay away from it in this choppy environment until we find some kind of bullish signal. So this is initially a bullish signal, but we want to confirm this bullish signal. And if the market comes back down to 172.20 area to 50 area and is able to hold above this area, if the 4-hour RSI is able to hold above 40, then we can start building that bullish outlook. Okay. Otherwise, be careful. The pound yen could be back into consolidation and maybe even some short-term bearish outlook, because there is just no strong directional signal at the moment, other than this last week's bullish attempt. Okay, so we need to build on that bullish attempt. It's not strong enough to give us a bullish continuation scenario. All right. Okay, so let me know if you guys have any other questions or any other pairs you want to look at. I'm going to take a look and see why I know I have looked at the pound Aussie before using Netdania. For some reason, it's just not showing here. There we go. So pound Aussie. looking to kind of, okay, so pound Aussie, first of all, we have this bearish breakout, right? The market in 2014 started with this price top. You can call this, head and shoulders or whatever, price top pattern that is. And then after that top, we saw consolidation. We saw the market at the crossroad between the moving averages. So it spent a few months doing that. And then in August, we saw the breakdown. So this break here finally broke below all the moving averages and below this multi-month consolidation. Okay. Now, at 1.72 or just above 1.72, the market reversed last week. Price is right back into this cluster of moving averages, testing this falling trend line. The RSI is back to 60. This is actually a spot where we should anticipate sellers. Okay? The only thing I don't like is that there was such a sharp rally. Now, if this rally was a little choppier, it would be more indicative of a corrective structure. The rally being so sharp suggests it might not just be a corrective structure. So our bearish outlook, first of all, should be limited, and we should anticipate the possibility that this market is going to get into some kind of consolidation, sideways market, if not a bullish market. Okay, now let's go to the 4-hour chart. So we saw this huge bullish trend, bullish attempt here, and again, this is kind of a recurring theme for these bullish attempts, where because of the prevailing bearish attempt, we don't want to jump on the bullish bandwagon just yet. We want to wait until maybe wait for a pullback, and if the market can hold above 1.76, this market might still be bullish, or at least sideways in the medium term. If it breaks back below 1.76, there's more chance that the market has revived that bearish bias, and especially if the 4-hour RSI also dips back below 40. Okay, so that's the pound Aussie. In the midst of a bearish market, it is showing us one, I would call a naked bullish signal, which I would like to see more. I would like to see more confirmation to build upon. Okay. All right, so that's pretty much it for today. We got another 10-15 minutes. If you guys have any questions, I'll stick around. And just want to give you guys a link to the site where I'm the chief currency analyst, forexminute.com. Oh, sent that to the host. Let me send that to everybody. Okay. Which chart looks more interesting for a setup trade this week? For me, it was really Euro Yen. I wanted to stay away from the pound yen, and to me, the Euro Yen with this bullish break has a potential of first of all of pulling back, just because the euro isn't really that strong. So we might get a better price if indeed the euro yen is in a bullish attempt, but a choppy one. So that's why I want to wait for that pullback, give us a better reward to risk, and for this short-term bullish outlook. Okay. The dollar yen. The dollar yen, no, I think it's still good to try to buy on the dip, but like we might want to start using smaller positions, like I said, because it is approaching some key resistance. Oh, I didn't talk about the key. Did I? Yes, yeah, I went to the monthly chart. There we go. Some key pivots here at 109. So I would limit the bullish outlook here. I would still buy on a dip, but limit that bullish outlook to the short term. That's for all the U.S. dollar crosses. I don't want to go against U.S. dollar strength just yet, but I want to limit that bullish outlook because a lot of U.S. dollar crosses and the U.S. dollar index, a lot of them are approaching key levels. Okay, so time for some consolidation in the coming weeks. All right. Okay, so that's pretty much it. Keep in mind, keep the themes that we have going into this week. Will Yellen give us any new information on the rate hike schedule? One such subtlety would be in the language she addresses, how long they have to wait. Considerable amount of time is just the status quo. That means the U.S. dollar might still be strong, but it doesn't have the extra kick to it. If she removes the word considerable, if she just says, yeah, we still have to wait a little more, then we might see a reaction, a bullish reaction in the U.S. dollar yen and the U.S. dollar crosses, excuse me. Another theme is obviously the Scottish independence vote. I'm actually not all up on top of that. I just know that if there is some uncertainty there, you want to stay away from the pound for a little while. Okay. The final theme is commodity prices. Aussie, the Kiwi, Aussie, and Loonie. I didn't take a look at the dollar Loonie yet, so I want to jump on that. Oil prices, gold, silver, all those commodity prices have been falling, and until we see a reprieve, a rebound in those in commodity prices, we should not be bullish on the commodity currencies like the loonie. But today we are seeing some loonie strength here as the U.S. dollar here topped off just below 1.11. So we should expect some bearish outlook in the near term, but when price comes down towards 1.1030 and when the 1 hour RSI comes back down to 30, we should expect some support here. I might even attempt a buy here around 1025, something like that. If the market breaks below 1.10, maybe we should expect some further consolidation or bearish correction, but I would still be bullish on the US dollar Canadian dollar pair in the medium term. Okay, but at that point we might want to look for a stronger, more meaningful consolidation to take shape before we consider where to buy on the dip. For now, on this naked dip, meaning there's no consolidation yet, on this dip, I would take some chances here at 1.1020 to 30 area. Okay, especially if you do see the 1 hour RSI dip below 30, especially if you see a bullish divergence. That's when you have the RSI low higher than the previous low, but the price low lower than the previous low. That shows that even though price is still bearish, it shows that the momentum could be shifting. Okay, and at that point we can consider a buy back towards the 1.11 area. Okay, and as far as the bullish outlook is concerned, when we look at the daily chart, we see that the dollar loonie still has upside towards the high on the year around 1.1278. Okay, the price action here from July through August and then here in September is a very bullish reaction, is a very bullish setup. It broke above the 200, 150 day moving average, and then held above these moving averages. So that's a bullish slingshot signal, and that's why I am looking for this pair towards 1.1278. And if the market comes back, like I said, in the 1 hour chart, if the market comes back to 1.1030, we can start expecting buyers. Now, even if it comes down to 1.10, I think this is a wide area where we should be expecting some buyers. Okay, what is the shift in the dollar loonie? Well, as we know, there's dollar strength. Canadian data has been unimpressive. We had some, I wouldn't say it's bad, but it's unimpressive. And really, oil prices falling, with commodity prices falling, that's another drawdown to the Canadian dollar, which is another commodity currency. So, as long as commodity prices are pressured, I'm still bullish on dollar loonie. Okay, especially with the current technical picture, which is also bullish. All right. Let's see, what else can we look at here? Okay, well, if you guys don't have any more questions, I think we can wrap this up today. Again, Wednesday is a very key session where we should expect a lot of volatility, and we probably don't want to have large positions invested in US dollar crosses and in pound crosses around that risk event. And that's why I'm looking at pairs like the euro yen for this week, to look for a pullback and to buy on the pullback. Alright, so that's it for today. I want to thank you guys for attending and letting me share my views on the markets. I want to thank FX Street for hosting this free webinar and a great resource for traders everywhere. And I want to wish you guys safe trading and good trading this week. Okay? And don't forget to check out my website here at forexminute.com. Alright? Have a good one. See you next time.